The JOLTS report was released earlier today, and on the surface, it looks like good news. But as they say, well, the devil's in the details. Of course, we're referring to the Job Openings and Labor Turnover Survey, otherwise known as the JOLTS report. It's a pretty comprehensive employment report. And there's good news. Job openings are rising. Here we see the job openings. This is reported in thousands. So when we see 7,700, it's actually 7.7 million. And this report shows an increase in the job openings from 7.5 to 7.7 million. That's good news. Hires are also rising, number of people being hired. Here we can see the hires are at 4-month highs, now resting just below 5.4 million. We were at 5.3 million just a couple months ago. That's also good news. Hires are rising, but not as much as the job openings, and this is a little bit troubling. Are employers being too picky? Why are there more job openings than those being hired? In terms of the job openings, we went from 7.5 to 7.7 million. That represents a 3.09% increase in the number of job openings. The number of actual hires went up 0.35%, a third of 1%. So where's the discrepancy? Well, we've spoken about job openings in the past, posted on websites. Maybe those aren't real. Is that the case? We actually have a couple theories we're going to tell you. There's also layoffs and discharges. Now, this includes everyone who's either laid off or is fired. Either way, leaving the job not voluntarily. Layoffs and discharges continue to decline, now resting at 7-month lows. That's good. We're at 1.6 million. We're at 1.8 million just a couple months ago. In terms of the number of quits, well, they continue to rise. They're now at 6-month highs. An increase in the quits indicates employees are growing more confident about the job market. They may say, well, I'm going to quit my job. There's something better out there. Here, in terms of the number of quits, that's a big spike, 3.266 million. That is a lot higher than last month's just shy of 3.1 million figure. In terms of total separations, now this includes everybody who quit, was fired, or was laid off. In either case, 5.2 million, that is an increase from last month's 5.08. In terms of the total separations, most of those separations are due to quits and not layoffs or discharges. In other words, most people quitting or most people leaving a job, they're leaving voluntarily on a confident hand. But there's a problem. Why does a JOLTS report look so positive, yet the non-farm payroll, remember from last week, why does that look so bad? How do we explain the discrepancy? Well, let's compare the two. JOLTS on the left-hand side, non-farm payroll on the right. The JOLTS report shows us data from a month earlier than the non-farm payroll with a delayed effect. It's showing us data from 2 months ago effectively. Non-farm payroll shows us more recent data, including any changes in the labor market that may have taken place after the fact. The JOLTS report shows us rising job openings more than hires. The non-farm payroll measures actual payroll data. It's a lot more representative of what's really going on in the labor markets. The JOLTS report shows us an increase in quits. That shows confidence. But those in between jobs will actually reduce the non-farm payroll number. Pretend, for example, someone says, there's better prospects out there. I'm going to quit my job and get something new. Well, that's not advisable. Don't quit something until you have something new. But in either case, if they're in between jobs, that will bring down the non-farm payroll number. In other words, the JOLTS number suggests strong demand for labor, but a weak non-farm payroll may indicate hiring bottlenecks, sector-specific issues, and other delays. In terms of the economic calendar, we have some big news. We have the Consumer Price Index, that's on Wednesday, and the Producer Price Index on Thursday. These are very big numbers because if you recall, last week we spoke about the non-farm payroll number. It was not good. It looks like the job market's declining. And of that number, really, it does not take into consideration at all the government layoffs from what's happening with the Doge effort, etc. So please be aware that the market is really anticipating a bad non-farm payroll next month. We're hoping that inflation is not rising, but at least it shows us that the economy is resilient. We hope this has been helpful. We look forward to seeing you back soon.